Greetings everyone, Fabian Claus here from the Guyana Revenue Authority. So today I'll be discussing a few important topics with you. Those topics are income and property taxes, corporation and capital gains taxes. Let's talk. April 30 is also the due date for the filing of property tax returns. And just like income tax, property tax is charged, levied, and collected in each year of assessment. According to the Property Tax Act, Chapter 8121, property encompasses movable or immovable assets, money, investments, and profits from sales. So it's not just house and land. And property tax is charged, levied, and collected on the net worth of property. What do I mean by the net worth? It means the property value minus any debts owed or exemptions to the property. So the debts would include things like mortgage or overdrafts, and exemptions would include things like furniture, jewelry, paintings, and works of art, as well as tools of trade. Therefore, to ascertain net property, you have to list all your property assets, movable and immovable, and list all the debts and exemptions. After doing all of this, the property net worth, if it's $40 million or less, no property tax is applied. But if the value is over $40 million, every dollar of the next $20 million of net property is taxed at 0.5%, and every dollar of the remainder of net property is taxed at 0.75%. Now, you're only required to file a property tax return if the net value of your property amounts to $40 million or more. You can submit your property tax returns online just like income tax. April 30 is also the due date for the filing of corporation tax returns. This applies to company profits derived from Guyana or elsewhere. And the rate of tax is 45% of the chargeable profits of telephone companies, also 40% on the chargeable profits of commercial companies, other than a telephone company, 25% of the chargeable profits of any other company, and 25% of small businesses registered with the Small Business Bureau that are engaged in manufacturing, construction, and services. Lastly, April 30 is also the due date for the filing of capital gains tax. Now, this isn't just any ordinary tax. This is charged, levied, and collected annually based on something called the net chargeable capital gain. So what does all of this mean? Well, simply put, if you sell an asset for more money than you originally paid for it, you will be assessed for tax on the profits you made. The tax is calculated for each year based on the gains you made in the previous year. Basically, if you acquire an asset for $1,000 and you sold it for $1,500, it means you made a gain of $500, right? Now, capital gains applies to things like transactions relating to the changes of ownership of any property by sale, disposal, transfer, or exchange, the surrender, transfer, or relinquishment of any rights in any property, the redemption of any shares, debentures or obligations, dissolving of a business or the liquidation of a company, merger of two or more businesses or companies, or the formation of a company. Now, let's talk some numbers. When it comes to capital gains tax, there's a specific rate that you need to know about. Subject to Section 8 of the Act, the capital gains tax is set at a flat rate of 20%. When it comes to capital gains tax, there's a threshold also to consider. If your net chargeable capital gain doesn't surpass $500,000, you won't owe any tax. That's right, zero tax. So imagine you bought a property back in 2019 for a cool $1 million. Fast forward to today, and you're looking to sell it at the current value at $1.5 million. You would have a gain of $500,000, right? But let's say you're selling it at the current value of $1.6 million. You would have gained $600,000 from that transaction. $500,000 of that amount is exempt, and 20% is taxed on the remaining $100,000. The capital gains tax payable is therefore $20,000. But here's some good news. Capital gains is not paid on gains arising from transactions that were effected more than 25 years after the date of acquisition by the person. Secondly, if the gains from the sale of your private residence are reinvested in another private residence of equal or greater value during the same tax year, you won't owe any capital gains tax. April 30th is just around the corner, and that means it's time to take care of your tax responsibilities, whether it's income, property, capital gains, or corporation tax returns. Mark the date on your calendar because it's very crucial. And you can now make your tax filings easier than ever before by signing up for e-services. Say goodbye to the hassle of paper forms and waiting in long lines. With just a click of a button, you can submit all your returns online from the comfort of your home or office. Visit our website for more information, or you can check out our social media platforms to learn more.